Hi, good morning. This is the Bitcoin Morning Brief. We have Jimmy, Giacomo, and Tone. We're definitely all streaming from different places today. Jimmy, where are you?
I am currently in Miami. I'm trying to get to Sao Paulo so I could give my seminar there, and of course it starts tomorrow morning. So I'm like scrambling. It looks like I'm gonna have to fly through Panama. This is going to be fun. Yeah. So yeah, my flight leaves in about 3 hours. So I'm at a lounge right now, but I'm gonna have to book it to another complete terminal, and then get on that flight, go through security again, do all that. It's
Yeah,
good.
so
Isn't
yeah, but your original flight was delayed because of mechanical issues. You missed your connector, and then your other flight you were supposed to be on got canceled.
And now
Yeah. So last night I went to Austin Airport, expecting to be connected through Houston to go to Sao Paulo, except the plane to Houston was delayed and they didn't have any other flights. So I managed to get them to book me something through San Antonio. So I had to go home and then to San Antonio at like 2 a.m. And it's like an hour there. And then I checked in 2 hours early to my flight to Miami, which was at 5:45 in the morning. Got here at 9. And then, of course, my flight to Sao Paulo from Miami was just canceled. So I don't know what's going on. So now I am booked through Panama. Hopefully this goes okay. And I make it there in time to teach my students. As it is looking pretty crazy. Yeah.
all right. Well, we'll have to go quick and wish you good luck on today. Giacomo, how's it going?
Very quiet here. Parents' home, Milan, little brother room. So no drama here.
Yeah, I like it. Tone, Dublin.
Good. I got I thought the event started today. It actually starts tomorrow. But today is there's something going on later tonight. Some people are speaking and dinner and drinks. So I'm gonna run out there the moment this ends.
My goodness. All right. Well, let's start this. This is gonna be a fun one today. Okay. So Bitcoin, Bitcoin Cash, Ethereum, Ripple, and all other CCs, cryptocurrencies, falls 5% or more as South Korean exchange hack. So CoinRail is a smaller cryptocurrency exchange in South Korea, and it announced that there's been a hacking attempt. Its website said that 70% of its total reserves were safe. However, what's come out, especially in Reuters, is that they lost over $40 million. Now, what they lost it in is altcoins specifically, and I hadn't heard of this one, NPXS by Pundits X ICO, Aston X, Dent, and then of course Tron. So I'm gonna laugh at this one. Just gonna go for it. That pretty much every news source was saying that Bitcoin's drop was because of this news or the Wall Street Journal, which we're gonna cover next. But a lot about this news. So right, I agree that consumer confidence lowers when hacks happen, but I do not think that this news about a small exchange being hacked is the one that's driving the price down, especially when Tone and Tyler and very sophisticated traders have been saying that, we were ready for a drop. But that's my opinion, and maybe because I haven't had enough coffee in Monday yet. However, Giacomo, regarding the hacks, more hacks, now South Korea, what do you think about what's going on?
What's going on is, as Nick Szabo put it some time ago, central counterparty are security holes. Basically, for securing cryptocurrencies, Bitcoin, but shitcoins especially, since the lower level of the overall software at our disposal for scam coins, securing these assets is very, very hard. It's okay if we try to do it ourselves. It's still very challenging, but at least we are not a very, very big target for the average hacker. But when you are doing that not alone, but in an organization, which means that there are a lot of parties that are involved in generation and storage of private keys and address generation, address spoofing and stuff like that. So basically, exchanges are a recipe for disasters. We can mitigate this. We cannot eliminate this as long as central counterparties are involved. Decentralized, or better, non-custodial exchanges can make a difference in the future, making the attack surface smaller and smaller and smaller. They are not necessarily decentralized. You could have a centralized but non-custodial exchanges with payment channels and stuff like that. But still, it's a very, very advanced topic. So I expect to see something like that in the next 2 years, but not sooner. In the meanwhile, you shouldn't keep your blockchain-based assets, so your Bitcoin or your very, very, very shitty altcoins on an exchange. You should buy there and then withdraw all your Bitcoins on a secure storage solution that you studied and deployed.
Sorry, I was on mute. Thanks, Giacomo. And that's really interesting and nice development. Hopefully that will happen. Tone, you always get a little heated on this topic. Follow up from Giacomo. What'd you think on the story?
No, I like what Giacomo had to say. I will just correct him and say, hey, you know what? The best security is stop trading shitcoins. Like this is what's going to happen. This is why you put shitcoins on your exchange, so that you start to increase your attack surface exponentially with every additional shitcoin you are adding to your exchange. So stop. Of the coins that got hacked, we've all only heard of one of them, and Tron, which is an outright scam. So I can only imagine what the other three were. So obviously this had absolutely nothing to do with the crash in Bitcoin. But this is what I've been telling people, that the traditional media, like all financial media, they just, the market crashes, they go find an excuse. The market goes up, they go and find an excuse. The same excuse can be used for both. If this exchange got hacked and Bitcoin went up 5%, they would blame, oh, more shitcoins got hacked, everyone is buying Bitcoin to stay safe, right? Like the same piece of news can be both bullish and bearish, because they just make up the news based on the price. The price is falling because we're in a bear market. Has nothing to do with the 100th most useful exchange in the world. Please.
Thanks, Tone. Are you just, pretty much saying that shitcoins are shit, and that no one should be investing in all the myriad of ways that they are, portrayed?
Yeah, like I'm staring at that picture.
So I brought it up for Jimmy.
I'm staring at that picture on the screen, and it's like ridiculous, because first of all, I think they have Bitcoin and Bitcoin Cash there.
Yeah.
Like one thing in that shirt is actually useful, and everything else is just garbage.
Yep. Yes. I was laughing, which is why I did bring this one up for Jimmy. And then it says blockchain underneath. And so for you, for a little laughter this morning, Jimmy, what did you think about this? And also definitely a follow up on the boys. I think that Giacomo's point especially was very interesting.
Yeah, I mean, we've been saying for a long time, you're an idiot if you're keeping your assets on an exchange, unless it's to sell it or to buy it or something real quick. Maybe if you're a trader, it makes sense to keep it on there so you have some liquidity. But for any sort of custodial thing, it doesn't make any sense. But I'd like to echo Tone's point. A lot of the news is kind of ridiculous, right? Like, there's no way that this tiny exchange, which nobody heard of until yesterday, caused a large drop.
In fact,
people weren't even aware.
Jimmy, in fact, you want, if you are the 100th most popular exchange in the world, you want to be hacked. You want to be in the news. Like half of the exchanges I know in existence is because they've been hacked.
Yeah, the thing is, news is rationalizing rather than explaining anything real, and they want to come up with explanations. There's a whole psychological aspect to this where people want explanations for things that happen, when oftentimes it's a lot more subtle and nonlinear and unable to be explained easily, which is why people watch Tone, right? Because he can explain some of this stuff, some of these nonlinear relationships in a way that at least can be parsed and have some pattern to it. But But yeah, this is a ridiculous article, and you know, purporting that a small exchange hack caused the drop is ridiculous on its face. And I think even they know that. It's just they need to make a story and they need to explain it. Otherwise, people won't read it. This is more or less clickbait.
Right. Moving on, I couldn't agree more with you guys, which is why I absolutely stated that one at the beginning. We were ready for a drop. That's what you've been saying, Tone. I think any news that came out, good or bad, potentially, you know, we were still going to get it. But I've also never heard of some of these coins until we started talking about some of the 51% attacks as well.
Again, just like an unknown exchange wants to be hacked to get in the news, an unknown coin wants to be stolen from an unknown exchange so that we mention it.
All right. Yes.
I would say that while for an exchange being hacked is not a good publicity, except that probably it works as good publicity because of the state of the market right now, but it shouldn't be. For a coin to be stolen is in general a very, very good sign, because it means A, that the creator of the coin cannot easily reverse the theft, like in Ethereum, for example, with the DAO. So it's kind of independent from the creator. It could be, at least. B, it means that at least for the time frame that the hacker needs in order to dump the coin can hold some value. So I don't think that many hackers will steal a lot of XRPs, for example, from the Ripple Foundation, because they know that it would be kind of pointless.
That's funny. Yeah. And
I go, sorry, Giacomo, I'll go the other way there. A hacker stealing Ripple would be the greatest thing ever, because it'll prove how centralized Ripple is. So please, if you're a hacker and you're looking to steal coins, do the world a favor. Steal Ripple so that they can reverse their centralized blockchain or whatever the hell it is, and you know, allow us to use that as a use case, like the Ethereum use case, for the rest of time.
And I'll just play the last contrarian then, though, that it does in general, high level, upset me about just how screwed up all these exchanges. That, again, this one I've never even heard of, but that is a serious loss, at least to a lot of people, regarding capital. I know your guys' opinions on the market's bleeding will help in the long run. But I do agree Bitcoin will come out on top, but this, like, all of this continuing to happen is just ridiculous right now. And it is, I think, bad for Bitcoin right now, just because the consumer confidence is just dropping. So yeah, never heard of this. And yet now we have it in Forbes, Wall Street Journal, The Guardian, and every single like huge publication is saying that the price of Bitcoin dropped because of this. So now apparently everyone probably knows about this exchange. So yeah. Okay. What was also at least put on Zero Hedge as another reason that Bitcoin's price dropped is Wall Street Journal, CME's BTC. And the Bitcoin BTC exchange dispute led to United States regulators to open price manipulation probe. So simply put, CFTC reportedly demanded extensive trade data from 4 different exchanges, from Bitstamp, Coinbase, Itbit, and Kraken. And they refused to give it to them because they said that it was overreaching. So CME then came back and requested the same data, but over the like a shorter time period with the exchanges, and the exchanges actually did give it to them. So I think this is kind of like the interesting twist, is that the CME saw the information through a third party, a London-based company, because it runs its own trading platform. So just quickly, my take is actually this isn't news. This has been happening for months. We talked about it, I think, like 4 months ago when the CFTC went to the CME. So it's not like they just started this probe after the SEC made those statements last week. This has been going on. So high level for me is that I see everybody trying to protect their own territory, as it's highly regulated market, right? Regulators classify these things into buckets. Each bucket in a highly regulated economy is assigned to a regulator, right? And if something new comes along like Bitcoin that doesn't fit into the bucket, it isn't regulated. Altcoins now fit into this bucket of securities. So CFTC is looking at this exchanges, looking at CME, and trying to put it all together because they suspect that something funny is going on with price manipulation, specifically what they're citing right now. So I see it as everyone's bunkering down, CME saying, no, we're strong and we want it. I'll even make the super bold claim and then turn this one to you, Tone. of this actually could be a bit why we're in a bear market, and net, causing this insane confusion in the space as a follow-up on our previous story. So what was your take on the story and the pretty bold claim that I just made?
I actually found this story to be very interesting. I mean, I read the Wall Street Journal version of the story, not the Cointelegraph version. I don't know if we have. Can we pull that one up? Did it have a link?
I wish. You want to give me your subscription?
No, I don't know why it works on my computer and doesn't work on your computer. I don't have a subscription.
Jimmy and Giacomo will have to teach me how to get around everything.
Anyway,
usually if you go to the author's Twitter and click through there, you can always get anything for free.
Okay, just learned.
Anyway, so I find this story very, very interesting. So so here's the thing, right? And the people in the world of crypto, most of them don't go beyond the headline. And I will also admit that 90% of the time, I do not go beyond the headline. But in this case, you have to go beyond the headline. So CME got the approval to do CME futures. How does CME calculate the underlying price of Bitcoin, because their futures are cash settled? Well, I believe they use 4 exchanges, and they're listed right there: Bitstamp, Coinbase, Itbit, and Kraken. And they got the approval because the CME said they had the proper data of the trades of those underlying exchanges. But apparently the CME went through a third party. And now that everything is, Bitcoin is volatile. No, everyone knew that. But, everything's been working. But they apparently, whether the CME or the CFTC.
Thank you, Jimmy.
Either the CME or the CFTC that regulates the CME decided to say, hey, you know what? The underlying data that goes into your exchange, we want a little more clarity on the actual trades of the underlying index that you are using. And that requires data from the exchange itself. Now, this is never a problem in the traditional market because everything is very, very open. So it became a bit of a battle between the CFTC and the CME, saying, hey, you guys need to have more insight on the data that compiles the index of the price of Bitcoin. But for that, they need the data from the underlying exchanges, which are the 4 exchanges that I named. And now the situation is the CME went to those exchanges and they probably said, well, we don't have to give you anything. And now the CFTC is coming in, and I don't think the CFTC wanted to come in. The CFTC wanted CME to handle it. Now the CFTC is claiming jurisdiction while your data is being used in an underlying index that is trading futures in the financial system that we regulate. And now these underlying exchanges like Kraken, they're like, well, we want to protect the privacy of our traders. So what people have to understand about this headline, and the reason why I went on this little explanation, which you did as well, Leah, is that they're not investigating manipulation of people manipulating the price of Bitcoin, okay? I think this is a bad headline. No one is accusing anyone of actually manipulation. They just want to make sure that they have, that there is transparency in the actual trades. If anything, they're more interested that the exchange is not involved in anything related to the trades of Bitcoin on that exchange. That's what the CFTC's most important part. And what frustrates me the most in the world of crypto is that when a guy has more money than you and makes a trade that's bigger than yours, you blame the fact that he's a manipulator. That's what bothers me in this space.
Interesting point. Yeah, Jimmy, I'll switch to you. What did you think about this story when you read it?
Well, I mean, I don't have like the financial industry insight that Tone does, but the only thing that I could think of was, yeah, of course, if you have choke points like exchanges, that's where the government's automatically going to go. And that seems to be more or less what they're doing is they go to the exchanges and demand things from them. And we saw this with Coinbase, a while back with the IRS probe. Whenever you have a centralized point of failure, that tends to be where the government steps in and chokes an industry out. And this is what's so exciting about Bitcoin, is that you don't need those centralized points, and that's a point of failure that you could take out, and that's what's interesting about it. The rest of it is, I think, covered pretty well by Tone, so I'll stop now.
I will just point out that I do not think that anything related to the story has any relation to the volatility and the price of Bitcoin.
Yep.
Going the other way than you, Leah, on that one.
Oh, you do think it has to do with the price?
No,
of
I think it has nothing to do with the price fluctuation.
That's exactly what I said.
Oh, okay. I thought you said the other way. I think this story is completely irrelevant to the current bear market we're in.
Yeah, exactly. I couldn't agree more that both stories are completely relevant, even though news titles are saying that. Giacomo, I'm just going to incite you a little bit today. They're trying to get it from Coinbase. What do you think about them specifically, as to Tone's point, which is correct, that their TIF is with the exchanges?
So, again, not just for security reasons, but also for transparency reasons, trust-based centralized exchanges are possible security holes. Of course, as I always say, I don't agree that regulation can be the solution to this. Awareness and better selection and driving legacy obsolete players out of the, or unethical players out of the market with boycotts and choice of better alternatives is the way, more the regulation for me. That said, I remember when Coinbase started to list Bcash, manipulating the price with a flash crash of Bitcoin and a flash pump of Bcash, and all the things that Coinbase did about the market manipulation. Well, Coinbase is one of the exchanges which price is used into the formation of the synthetic price in the future market of the CME. So I think that, as Jimmy said, I don't have insight into this kind of market. I know nothing, but, and I really agree with what Tom said, but in the particular case of Coinbase, I'm not surprised, and I'm kind of happy that somebody is starting to call it out for being at best very, very dodgy on some kind of transparency matters.
Right. Let me just put in one closing comment. This is where this is where the people in the crypto space are a little naive. And I continue to say, whether you're running an altcoin or anything, success in this space could be equivalent to failure. The more you succeed, the more you can fail. And here's a good example. You create the most perfect, most liquid, most useful exchange in the world that has potentially nothing to do with American investors. You go so far, you have like the greatest IP tracking ability possible, and you can guarantee with 99.9% certainty not a single American is trading on your exchange. However, because your exchange is so perfect and has so much liquidity, even eliminating every single American, the CME, the biggest futures exchange in the world, happens to be in America, and they decide to use the price of your exchange in their underlying index you kind of agreed, but you might not have had to agree. They could have said, they have the best price, we have to use that price in our index for our futures for the Americans to trade. And all of a sudden, CFTC has jurisdiction over your exchange because they have to regulate the underlying index of the CME. And you did not even grant permission to the CME to use your data, but because that data is quasi-public, they're using it. And all of a sudden, CFTC can claim jurisdiction over your perfect company that did everything possible to avoid the CFTC. Okay, and this is what people still don't comprehend about the global financial system. Now, I'm not saying it's right. I'm just saying that's the way it is.
Yeah, I think that's a good explanation. Yeah, absolutely. Yeah. And just because of it, and what I, again, just like last point, which you can debate me on, I guess, is just, I do find it's really interesting that at this point, evoking this London exchange is that it also shows that they've formed relationships. And
I really wish they named that company. I really wish they named the middleman that supposedly had the insight on the data of all of these exchanges that the CME trusted that would be sufficient. I'm really curious what company that is.
right. Yeah. And it's, you know, I don't see Bitcoin's not running into a problem with the regulators, but the exchange itself is regulated. So if Bitcoin's being manipulated by the people on the exchange or outside forces, if I understand you correctly, then the CFTC, can shut down the exchange trading of Bitcoin. So I agree. I saw this as a really important story because people also need to be really careful. And regulators, again, have made this go on for a while, but it's very interesting, unless I got that one wrong. All right, more finance for you today, Tom. And your favorite, ugly old goat. So establishing a position, ... The hardest part of hodling, I never get this one right, and trading. I know it's hodling. So this was really long, but really, really interesting because he actually got very personal. And it's kind of, I saw it as a mea culpa apology for going to prison and how there were so many issues with the exchanges and they had no money, then got some and lost it all, kind of as a background of this story. And what I kind of learned from this is that any trader, small or large, smart or stupid, can end up growing their account, but it's really necessary to understand it through money management. And it's not by placing big bets or knowing the market can go either way, but you need to prepare. And the only way to prepare is by putting small amounts of money into something you really believe in, like Bitcoin. And you can keep doing that until you get to a point where when you get to like the right time, because he's a position trader too, and the right place where you can make big bets, but never more than 5%, I think he's saying, of your assets. So that's kind of the background of why it happened. I also found it was kind of interesting that he evoked Jesse Livermore, who obviously has a very sad but interesting background history. So I will turn this right over to you. I know you're a big fan of I don't know. I just lost this one. Ugly old goat. What'd you think about this story?
Yeah, no, I mean, I've known Ugly Old Goat for years now. He's been on my podcast. I mean, we shot the podcast in person, but he did not go on camera. Yeah, he has a very interesting history. I mean, a few people know what he looks like. And yeah, he did 11 years in prison. And as he says in the article, he's now 68, almost 70. And he's done a lot in the world of finance before and after his time in prison. And he really knows what he's doing. And read this article. I will say, however, I kind of disagree on like some of the nuances. I'm a different trader than him. Me and him are pretty different traders. I like the fact that he encourages dollar cost averaging, and he encourages only putting 5% of risk on any given trade. Those are all good, but just towards the bottom where he talks about doubling down a position that goes against you, my style of trading is different, and he's attended my workshop when I did it in Mexico, and as I tell my students on my workshop, if you take on a position and the trade starts to go against you, if you did not intend to double down at X, if it was to go against you, you do not double down. So I kind of go the other way on some of his trade tactics in my trading, but it's all about consistency. It's about what works for you. If that's how you trade all the time, then that's okay. But if that's how you trade sometimes, that's very, very dangerous. But other than that, it's another great article by Ugly Old Goat. And please go to his Medium and read every article he ever posted, which is not that many, maybe about 5 or 10 articles.
Interesting. Thanks, Tone. Jimmy, what did you think when you read this? And I have your blog post up here.
Well, yeah. So the previous one was very personal, getting into trading and stuff like that. This one I think is like it reminded me of this one, and I wanted to retweet this at some point, but I didn't get a chance, and maybe I'll do this after the show. But great article on the psychology of money, on why it's so difficult to hold. The hardest thing to do in finance oftentimes is just to do nothing. And that's especially hard when things drop. And I think it's a very relevant piece given where Bitcoin is right now and how many people are panicking and stuff. It gets into just how much you have to think, like control your emotions and hold through a lot of this stuff. Anyone that tells you that holding is easy is an idiot, because Bitcoin goes through these ups and downs and they think, oh, okay, well, I could have gone through that. No, you couldn't have, unless you had a lot of conviction, which is what Ugly Old Goat talked about in his story. And great article, lots of really practical advice about how to deal with a lot of that stuff and knowing yourself, because for a lot of people, their biggest enemy to compound interest and the power of exponentiation is themselves. And oftentimes it's a very difficult thing to admit to yourself that you do have some flaws in your financial thinking, and that the best thing you can do is to, try to improve some of that instead of, like sort of letting your flaws have you lose money. So very good article. I thought that's something that a lot of people should look at.
And since Jimmy almost mentioned it, so based on Jimmy's recommendation, I'm halfway through Saifedean's The Bitcoin Standard book, and Ugly Old Goat's #1 book recommendation is called The Art of Execution. I have not read that book yet, but after I get through Saifedean's book, I'll probably trust Ugly Old Goat's recommendation and try to find The Art of Execution on audio, which I couldn't find. So I may be forced to actually read a book.
Well, actually, you said you were listening to it, so that's not reading, but yes.
Well, no. I'm listening to The Bitcoin Standard.
Got it.
I wanted to also buy The Art of Execution on audio, but I couldn't find it.
Gotcha.
Yeah, and it doesn't exist. And Tone doesn't like to read; he likes to listen more than read. So
That statement is also debatable, Jimmy.
That's true. And Ugly Old Goat is also, I believe he sent out some tweets about how he's a fan of Saifedean's book as well. Very interesting, Jimmy. Thanks for bringing that up. Giacomo, what did you think?
So while I have some strong opinions, generally favorable, strong opinions about things like the Bitcoin standard, so I really enjoyed that book. I really like Saifedean way to explain things, and I share 99% of the content of his book. And so about macroeconomics and the possible utility of Bitcoin as a better money in general, I completely agree with these things. About trading, I'm really ignorant, and there are many things that I don't understand. And so my trading strategy, so to say, is very basic. Like I just keep, I'm not suggesting anybody to do the same, but what I do is keeping the greatest part of my savings in Bitcoin and keeping a buffer in fiat just to be sure to be liquid in case of family or personal or professional urgencies. The reason I do so is that one of the parts that really confuses me about trading is that part of assessment of the risk, like invest only 5% in risky stuff. And I get that, and I do think that Bitcoin is really, really, really risky. So I don't think that Bitcoin is a risk-free asset. I think that there are serious non-zero chances that Bitcoin goes to zero, because it could be a failed experiment. I don't think so. I think it's more likely that Bitcoin can succeed at this point, but the goal of Bitcoin is so disruptive, so radical, that the forces against it will be major, and there will be some amount of chance, a randomicity involved. So Bitcoin can fail. So it is risky to store everything in Bitcoin. But the reason I'm confused about many conservative strategies, like just invest 5% of your global asset allocation in Bitcoin, is that the alternatives to Bitcoin, in my ignorant and outsider opinion, are not risk-free at all. Like if you just risk with 5% of your capital in Bitcoin, that means that you are allocating 95% in what? For many sophisticated traders, the answer is actually a good answer. Like they have a very differentiated allocation of different asset classes with different kind of counterparty risk and a different kind of geopolitical risk. But for many basic traders, the answer is, yeah, no, Bitcoin is risky, so I'm keeping 95% in US dollars. And I don't think the US dollar is a risk-free asset class at all. For sure, living in a Eurozone, I don't think that that euro is a risk-free asset at all. And things that are perceived as risk-free assets for the major part of the non-professional traders, like government bonds, I think that they are like super risky asset in the middle round. So yeah, I agree that you shouldn't trade with very, very risky asset for more than 5%, but which are right now the non-risky assets? I'm still a little bit confused about that. And since I'm lazy, I still didn't figure out much. So I'm overexposed in Bitcoin. Of course, one of the things that I want to notice about the conversation here is that I love a space in which people can discuss serious topics, starting with, I know that you really like Old Ugly Goat. Yeah, I do like Old Ugly Goat. I mean, it's wonderful that we can discuss like stops and the crypt and the nickname stuff. I just love it.
Yeah. Wow. Thank you, gentlemen. From finance to psychology to values to that was really interesting. I really like that. And I'm going to evoke you again because you are not lazy. That is not a true fact at all, Giacomo. And I will say maybe I'm lazy because I didn't understand this one, but it was very exciting news, I know, over the weekend. So atomic swaps on Lightning and a DIY guide. Giacomo, please, what's going on here?
So basically, atomic swaps means that when you have two blockchain-based systems, two Bitcoin-like systems, you can create a Bitcoin transaction, then is released only at some condition, and then you can create an altcoin transaction that is released at some condition, and the two conditions are interlinked in a way that basically make the overall exchange atomic, which means that either it happens or it doesn't happen. So this reduces possibly to zero the counterparty risk of the trade. It's not that I give you, Leah, one Litecoin and then you give me the Bitcoin, but we sign together a transaction that if we both sign, it will work in both chains. And if we don't, it will not go in any direction. So zero counterparty risk. This could be useful potentially to avoid exchanges entirely, at least cryptocurrency to cryptocurrency, or to reduce the custodian role of the exchanges in order to increase security and censorship resistance and regulation resistance of the exchanges. But doing atomic swap on chain is very ugly. It's difficult to coordinate. It has a lot of scalability problem and a lot of privacy problems, because basically when you reveal one of the secrets, it's very easy to link your transaction with the other. So you are giving away privacy. So one great thing about Lightning network is that Lightning can be used, the routing. So Lightning is a system made of two parts. One part is the payment channel structure, in which me and you set up a channel, we put Bitcoin in, and we can just update our percentage of the channel without hitting the blockchain. And the other part is routing. So I can update my state with you in a conditional way if you update your state with another party, if he updates his state with another party, and so on. This is routing. And the good thing about Lightning is that this routing can work with any kind of chain, but not even chain. I mean, in a way, I could send Bitcoin to you via Lightning Network in a way that does something like this. I move my Bitcoin state with Jimmy. Jimmy changes his Litecoin state with Tone, and Tone changes his Bitcoin states with you. So we are basically switching between different blockchains, and that is way easier than and smoother and faster and more efficient and more private than traditional on-chain atomic swaps. So that's basically every Lightning Network compatible blockchain, which is in theory any blockchain that can use the HCTL contract, hash lock time contract, can be used, and SegWit possibly, can be used. So Litecoin, Bitcoin, Vertcoin, and I don't know what other kind of scam coin can be used all together seamlessly. And this is something that people is trying out right now.
Thank you, Giacomo. Always very helpful. And Jimmy, what follow up to Giacomo?
Yeah, I think everything that he said is absolutely right. The main thing that I see isn't necessarily like swapping between altcoins and Bitcoin, although, I mean, and that has a big market right now, but I think in the long term, the main use case for something like Lightning is fast back and forth with a side chain, something like that. So this is obviously really cool. And it's not, even if you're a Bitcoin maximalist, there's an aspect to this that you can utilize that will come eventually.
Thanks, Jimmy. Tone, do you have a comment on this?
No, I mean, well, I always have a comment, so maybe I just lied there. I'll make it real quick. Basically, yes, this will help eliminate exchanges, but just like in our first story, all of these altcoins are pretty much useless. Like maybe 2 to 5 of them could have a little bit of borderline edge cases, but I mean, this is step number 1 to eliminating exchanges, and so Giacomo's right. But step number 2 is going to be the elimination of these shitcoins. So while it's really, really cool and it's a good science project, computer science project to build these atomic swaps, there might be some use cases in the sidechain space, like Jimmy said, if we ever get sidechains. But the future of atomic swaps being used to exchange currencies with each other, that's temporary. It's going away because all of these shitcoins are going away, or at least these will go away and new ones will show up, right? But there's going to be a little bit of a chicken and egg situation, as in when a new one shows up, at which point do you find it worthy to create atomic swaps for a brand new blockchain? And until it's worthy to be on a brand new blockchain, how is it going to be traded if no one trusts centralized exchanges, right? So there'll be a bit of a chicken and egg of having that atomic swap on a blockchain that has no value, because it can't get a value until it can be traded as a shitcoin. So we'll see what happens.
Interesting. Thank you, guys. Jimmy, on to your latest Medium post. You just posted it. What's it about?
Yeah, so this is talking about smart contracts and how you have the Oracle problem and all of it. Like I tried to frame it in a way as to give the obvious benefit, which is that you have trustless execution, right? Like you can, you don't have to rely on the other party sort of going with their word. Like if you have some futures contract or something like that, and the other party sort of decides, you know what, it's worth you know, having a lawsuit because whatever it is that I was going to sell them was too valuable, or I can make more money by holding on to it and inviting a lawsuit or something like that. That's the main benefit of a smart contract, is that you don't have this human subjectivity and you have trustless execution. And I go through why that's actually really, really hard. And you know, adding Turing completeness doesn't really add that much. It just adds a lot of complexity. And how you have this Oracle problem with any physical object in the real world, or even like digital rights in the real world, anything that's regulated by the real world and having a tokenized version, you can't really connect the two without having some link or what you would call an oracle that can tell you about the state of the real world. And that introduces a dependency which takes away from that trustlessness. So, hopefully it's useful to people. I did notice that, why blockchain is hard, which I published about a month ago, was the most popular article that I have ever published, like by a decent amount too. So I don't know, maybe explaining something like smart contracts, which seems to be a buzzword, could have the same effect. That was the idea behind it.
Thanks, Jimmy. Everybody, check it out. Tone, since you said you always have a comment on things.
Very quick. So Jimmy, the link to this article, you gave it to us right before we went live, so I have not actually read this yet. But I don't know if you covered this part, but I always like to correct people when they talk about smart contracts. I try to get people to differentiate smart contracts and decentralized smart contracts, because they are very different things. You can have
I cover that. I definitely cover that.
Because you can have a smart contract on a centralized database, and that doesn't mean your contract is being censored. Because if your contract is a legitimate contract, you don't have to worry about censorship, because the intermediary that's executing your contract is incentivized to actually execute it based on the AI rules in that smart contract, which Jimmy probably explains is hard enough on its own. When you decentralize a smart contract, that doesn't need to be decentralized because of censorship resistance purposes. You basically make your problem exponentially harder to the point where you have Ethereum.
No, I point out that once you start trusting a central party to execute your contract, then it's no longer trustless, and that's a big problem. And the only things that really make sense in a smart contract are digital bearer instruments on a decentralized platform, because even on a quote unquote blockchain, it doesn't work, because you can have something like Ethereum and you can have a legitimate smart contract like the DAO, but they'll roll it back because they didn't like it.
But that's when you need decentralization. The problem is 90%, what am I saying? 99% of things in a smart contract do not need to be decentralized. So you should be perfectly happy with the centralized entity executing your smart contract and being responsible for its execution.
Well, if that were, we could talk about that a little more later, but please read through the article.
Oh, I will. We'll pick this up another time.
Definitely. But Giacomo, just one quick last thought about what the debate that thoughts that just ensued between the Tone and Jimmy.
So first of all, I want to read this article. I'm really looking forward to read it. I think that it's some clarity on this topic is badly needed. A personal anecdotal evidence. I spent most of the last 3 years of consultancy with the incumbent discussing blockchain and cryptocurrencies and applied cryptography and Bitcoin. And usually the first days, every conversation was ending with the question, but can I do smart contracts? Like this term raised a lot of expectation, because there is confusion about one thing, which is basically the automatization of a contract, which is one idea. So the fact that you can use computers in order to make a trade of some kind, an exchange of some kind, an execution of some kind, automatized in a digital way. And this is one thing. And then there is the idea of decentralize and make zero counterparty risk and censorship resistant a trade. And while Bitcoin smart contracts are not very interesting for the first part, because they're not so complex, so expressive. They're mostly interesting for the second part, like Jimmy was saying, the fact that you have zero counterparty risk, that everything is decentralized. There is a huge class of things that people are associating with the term smart contract, exactly as Tom said, which has nothing to do with this kind of flavor of the term. So many people just want to have a computer run program managing financial or trade related stuff. This is one definition of smart contract, which, I mean, we can also use it, but we have to be aware that in this definition, a Coke vending machine is a smart contract. So if we are okay with the fact that a Coke vending machine is a smart contract, we can do a lot of things with this kind of smart contracts, which are just automatized digital contracts.
Right.
But if you are going to the hard definition, which is basically zero counterparty risk, finality, self-enforcement, then you have to move on serious stuff like Bitcoin multisig, payment channels, and stuff like that, and in the future much more. So, but in general, I'm looking forward to read this article, and I think that clarity in this topic is super needed.
Yeah, Giacomo, and just to add to that, the debates that I usually end up in is that we agree that a Coke machine is a smart contract, but the people that I'm fighting with is these people are trying to convince the world that that Coke machine needs to be decentralized because you buying that Coke through that machine would be more efficient if that transaction is recalculated forever and ever and ever every 12 seconds on Ethereum.
Yeah, I look forward to see a Coke vending machine in which every single node of the planet has to drink the same can of Coke simultaneously in order for the Coke to be effective on your thirst. That will be very, very effective.
Thanks, Giacomo. Good to laugh on Mondays. Jimmy, weather report?
Yeah, so something happened at around 9 a.m. Not sure exactly what, but there's a lot of transactions coming in. So if you need to get it in the next block or next hour or so, you're probably going to have to pay on the order of 30 to 50 Satoshi per byte. But if you can wait, I'm sure it'll come back down, unless this is a sustained spam attack. But yeah, I imagine 5 will get you in sometime today. It's just a matter of time before this stuff starts shrinking.
Thank you, Jimmy. And on to TA.
Oh, sorry, guys.
All right, I'm going to have to go too.
Yeah, sorry.
Ironically, I also have to go, but and I did like 2 hours of TA this morning, so this will literally be like a 1-minute TA version. But yeah,
I have to give back the room to my brother. So thank you very much, and see you tomorrow.
You guys are
and I have to go catch a flight, so see you guys.
Bye guys.
Jimmy. Okay, I'll stick with you, Tone.
All right, my event actually just started, but it's about a 10-minute walk, so let's just do TA real quick. I'm not even going to talk about my website. Guys, just please watch this morning's show. Let's take a look if anything's changed. Nope, we're still at 6,750, and we are still looking like the week following the week of the big drop from the 50-week moving average. Oops, let's do this. Double click on that, make this smaller, scroll to the side. It still looks a lot like this week here. So we have just moved on to the first week of September, and it was a double consolidation week. I believe this will be mostly a consolidation week, and then we go down next week. So I think this week should be more of a consolidation than a drop. Could be a little bit of a bounce to the upside, but mostly I think this will be a consolidation week. I thought I drew a big triangle earlier today here, but I no longer see it. Oh, I know why. I took off annotations. There it is. So at this point, I will be paying very close attention to this triangle, maybe a short bounce, get stuck here for a week, maybe 2 weeks, and then closer to the end of the month, a breakdown, and I'm still looking for my $5,000 target. Here's the daily chart. The daily is on 3 of 9. We can have 2-3 more days of consolidation, and then we can start going down, keeping our 9 count intact. The 12-hour chart let me go here. The 12-hour chart is on an 8 of 9, so your 9 is coming. That's not a moving average, guys. That's volume average. I mean, I can see a pullback to 7,000 after you get the 9 later on this evening. Okay, so keep that in mind as well. Or overnight, actually. You got 7 more hours to go. Yeah, over at night, you get a 9. The 4-hour chart hit a 9. I tweeted this out. Hit a 9, and it kind of stagnated, which makes sense. I pointed that out in my tweet yesterday to keep an eye out for, we dropped a lot. I think we're going to consolidate for a little bit, maybe go up as high as 7, but ultimately, I am still looking for 5,000. And the 1-hour chart, I mean, below this line gets you in trouble. A rebound can take you as high as maybe 7,100. That's pretty much it. Gold broke its count. There's your 9 on the NASDAQ weekly as of today. And here is your weekly S&Ps on an 8. Oh, that's weird. I thought it would be another day. What's going on? It's not updating very well. There should be another, there should be one more candle there. That was weird. I'm not sure what's going on with my S&P. Here's the S&P daily. It's on a 7. And the S&P weekly, there it is, the 913 weekly S&P wasn't updating for some reason before. So watch out in the stock market for potential tops sometime this week across the markets. That's pretty much it. Good show with you and Tyler this morning. I caught that. And I think I'm done with videos for the day. I think that's enough.
All right. Well, check out Tom's video this morning. It was at 6 a.m. my time. I don't know what time you guys are in, but it was very good. Really good Q&A at the end as well. And Jimmy's Medium post, which is also really good. So Tone has to go. I actually don't really have to go, but maybe you guys have to go. All right. Have a great day.
Bye. See you guys later. Good luck trading.